Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. And we did see a little bit of a run down today before the market turned around, and actually towards the end of the day tried to make its way back upwards. Now, what can we glean from this? We did talk about this major level down here. You will notice that we did bust through it and continue down right about to that blue line, which was kind of my target down here. Didn't quite make it, but we're awful close. And you can see that the bulls are trying everything they can to get back up and over this level. This is where they wanted to get to and what they wanted to stay above. As I said, this is exactly why I give the other side, whether it's the bears or the bulls, at least one day to get back up and above any major support or get back below any resistance when it comes to these major levels. A lot of times they might run it down for a day. Sometimes the bulls wake up the next day and go, oh man, we got to do some work today. And they do bring it back up. Now, overall, what is this? It's really early to tell. But if this is the 1, 2, 3 down, this looks like a nice 1, 2, 3 back up, which is kind of an ABC, which would probably be a 4 wave before a 5 down. So I'm not completely convinced that what this is any kind of a bullish run at all. There's still a lot of work that the bulls would have to do to convince me of that. So looking at it just as what it is, just the chart that's in front of me, the important part is we are back up and above the 9900 area, more importantly the 9850-ish area, which is right back here. But you can see we did get back above 9900. We did get back above the 20 period moving average, but this looks like a pretty uniform 1, 2, 3, or ABC if that's the way you want to count it, for like a 4 wave. So this could be 4 of 3. This could be the 4 wave before the 5 down. It's anybody's guess. I'm not going to get into it. But it does give us an idea of where we may be. Just keep in mind, looking at the daily, that we have gotten back up and above this. Yes, this is a potential reversal candle for some of you that want to be bullish on this markets. You could maybe call this maybe a tweezer bottom or a bullish engulfing. I don't really care. I don't split hairs when it comes to candle patterns or anything like that. But this is a potential reversal pattern here. Going to need some extra work tomorrow, back up and above 99.50. More importantly for me, back up and above 10,000 is where I really think this market's going to have to get. Even so, I'm not long-term bullish on this until we get way up and above all this stuff up here that we were fighting with earlier. That's a long ways away. So you can see that we did make it back up and above this level, right at about the 9,900 level on the daily. That is good for the bulls, but still a lot of work ahead of them. The NASDAQ on a 60-minute, this was so weak yesterday. Now coming into today, we did get a push back, but you can see it was not enough to get above the 1,800 level. That was the area we were watching. We broke it, we tested it, we broke back down. Now we're back to test it again, putting in kind of a basing look here. For the time being, until we get back above 1,800, this is a potential low base formation. That is a bearish formation. So just watch for breaks back above 1,800. Keeping in mind that the 1817 mark is right above you, but could make for it at least a decent intraday trade if you're looking to do something with the markets on a daily basis. NASDAQ from the daily putting in, yes, this is I don't know, maybe it's a hammer. I don't know if I'd consider it a hammer, but close enough. Whatever. Once again, not splitting hairs here. It is sitting right on support, but we had one of these a while back in the other indices. Sat right on support. I'm not sold on where it's at. I'm very big about using and playing candles in the context for which they were meant to be played. I'm not convinced that this is an overall bullish candle, even though it does have a pretty decent volume to it. Gotta prove it to me. I am a prove it to me kind of guy. So really watching this 1820-ish area. This is where the 200 is. You can see that's where that 1817, 1820 area is still very heavy overhead resistance now on the NASDAQ. So if you want to trade up and over 1800, you want to make sure that you're watching very closely as we approach these areas up here. From a weekly perspective, now it's only Tuesday, but notice how we did kind of bounce off the 50. The low was 1770, where the 50's at 1776, but close enough for me. Still got a ways to go yet. There's a lot of trading to be done before Friday, so we'll look at this more on Thursday. Just was interesting to take note of the fact that it did come down and bounce off this 50. SPX on a 60-minute also breaking down, finding perfect support right down here at this 10. I don't know what that is. 1045, 1048, who cares? Whatever. It's this level here, working absolutely beautifully. Tried to get below it, just couldn't do it. Coming right back up towards the end of the day to find what overhead resistance, not only at the 20, but at this line right here, that will and probably cause a little bit of a slowdown once it gets up to that area. I should move that up ever so slightly. I actually don't have that in quite the right place. I'd put this closer to about 1068 or 1070 up here. However, that would be the place to be watching for some overhead resistance for sure. Once again, still kind of looks like a 1, 2, 3. Maybe this is a 4 before 5 down. Like I said, anybody's guess. The 4 wave could come maybe back as high as this, I suppose. Just watch it carefully and look for breaks up and over these areas only on an intraday basis. If we look at it on a daily, you can see that we were able to get back above this 1055-ish area. And that does give us, yes, a potential reversal candle. Still a lot of work to be done, though, by the bulls if you're going to get me in to the long side in any great amounts. However, from an intraday trader's perspective, don't be afraid to maybe take a little bit of a long position if the markets are giving you a good trend. From a weekly standpoint, we'll look more at this on Thursday. Keep in mind, though, that look where we came to. Gee, isn't that not a surprise in the least bit? Right back down near at towards this little green line here. VIX on a daily, markets went up, VIX went down, but while it is a move of almost 8%, it really isn't much in the bigger scheme of things. We're still in this red area, and that's all we're really looking at. However, the drop in the VIX also means a little bit of pain for the options people who might have been holding, especially if you're holding puts as the market ran up today and the VIX went out. You might have lost a little bit more on your puts than you would have liked, but anything can happen here. This is just telling me that there's still a lot of fear in the markets, and it's not subsiding anytime soon. Apple on a 60-minute, it also managed to fall and find its way back to this support area right here. You can see once it got below these areas here, Apple was actually very weak today. Some of the other indices tried to pull themselves up and come back towards the end of the day, but the NASDAQ finished down while the other indices finished up, and Apple was one of the causes. I mean, it kept just falling most of the day. It was really a pretty good short most of the day. Coming here into this 247.50 mark. Where are we at? 245.50. I'll bet that the bodies of these are right there about the 247.50 area. From a daily perspective, you can see Apple trying to hold on and not being able to hold on to the 50-day moving average. So now we have a drop below the 20-day, a drop below the 50-day. Apple's really going to have to work hard here to find its footing. Not saying it can't happen. Yes, it is below some pretty strong support, but it is making its way back up. If you run a fib on this, you'll probably get right around a 50% fib retrace right here. So still an opportunity for Apple to find its footing and continue upwards. Gonna need some follow through on the markets though to help it through that. Apple on a weekly, going to look at more of this on Thursday, but you can see with the drop today that only makes it more ugly from a weekly standpoint. FAS on a 60-minute pulled itself up at the end of the day, coming right back into this overhead resistance though. So I don't know, not much to trade in here. Still obviously intraday trades only here now that we're back up and above this lower level. Got one day below it, and they brought it right back up today, giving us a potential reversal candle on FAS. Still a lot of work to be done. I wasn't real convinced with the move we saw today, just so you guys know. I mean, the volume was decent coming in towards the end of the day to the upside, but I'm just not. The market action hasn't given me anything to really call to be bullish on this market quite yet. FAZ falling down and through this area here, coming back, did tried to poke its head above that 18, and obviously once again holding as very strong overhead resistance. So we're back into this 1650-ish area, looking to hold and see if we can get either a bounce off this area or any break below it. And that's about, I don't know, let's call it 1640, somewhere around in there. Would give you a pretty good intraday shorting opportunity on FAZ. You can see it try to get up and over this, just couldn't make it. The high was 1810, just could not get itself up and over this area today, nor could it hold. Now coming back down. What does it amount to, guys? It's chop. It's just chop. Please continue to play FAZ, FAS on a intraday basis only. Okay, be back with you again tomorrow. This was more of a consolidation day. Yes, we saw kind of a move by the bulls towards the end of the day, but it was nothing meaningful at this point. Protect your capital. Be careful. Be patient. We'll get our chance very quickly. Talk to you soon. Bye.